participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touch-tone telephone. If you wish to remove yourself from the please note that this conference is being recorded. I now hand the conference over to Ms. Renu Baid Fugalia from IIFL Capital. Thank you, and over to you, ma'am.
Thank you. A very good afternoon to everyone. On behalf of IIFL Securities, we'd like to welcome the management team and everybody for 4Q FY25 earnings call of CG Power and Industrial Solutions. From the management team, we have with us Mr. Amar Kaul, Managing Director and CEO, Mrs. Sushil Todi, Chief Financial Officer, Mr. Marai, EVP, Drives and Automation and International Motors Business, Mr. Mukul Srivastava, President, Switchgears Business, Mr. Ajay Jain, Vice President, Transformer Business, Mr. Chidambaram Balakrishnan, Vice President, Railway Business, Mr. Indranil Dhaneshwar, Vice President, Motors Business, Mr. Sriram Rangarajan, EVP, Head Consumer Products Business, and Mr. Gaurav Makhija, VP, Designate Switchgear and APD. Without taking much time, I now hand over the call to Mr. Kaul, Amar Kaul, for his opening comments. Thereafter, we can start with the Q&A. Thank you, and over to you, sir.
Thank you. Thanks, Renu and the team. And good afternoon, everyone, and welcome to CG earnings call today. Starting with the summary of results, we had a solid finish of the year with all-time high quarterly as well as annual standalone revenue and PBT. Our quarter 4 sales grew by 23% compared to previous year's same quarter, and the orders intake grew by 20%, and PBT before OI grew at 20%, making it the strongest quarterly performance in recent times. For the full year 25, sales grew by 23% year over year, and the order intake grew by 35%, and PBT before OI grew at 19%. Our order backlog grew to 9,909 crores, little short of 10,000, that's what we are targeting, and continues to be on an upward trajectory, offering strong revenue visibility for the upcoming fiscal year. Now, as I go deeper into Q4 2025, we achieved sales of 2,563 crores with an EBITDA of 407 crores and PBT of 381 crores. These are the highest quarterly numbers in the recent times. Now, if I go deeper into the details of what is behind it, is the aggregate sales for the quarter was 2,563 crores, recording a growth of 23% year over year and 7% up versus the previous quarter as well. The profit before taxes, before other income, was higher with a growth of 20% at 313 crores at 12.2% of sales, as against 260 crores of which was in the previous year same quarter. Free cash flow generated for the quarter was 202 crores. Return of capital employed annualized was at 37.4%. Order intake for the quarter was 3,650 crores, which is 20% growth year over year. And our unexecuted order backlog as of 31st of March was at 9,909 crores. When I go to the full year performance, our aggregate sales for the year was at 9,329 crores, which is a growth of 23% year over year as well. And profit before taxes was at 19% year over year at 1,181 crores, which is 12.7% of sales, as against 996 crores in the previous year. Free cash flow generated for the year was 727 crores. Return on capital employed was 32.7%. And order intake was at 13,526 crores, which is 35% growth year over year. And the unexecuted order backlog as of 31st of March was at 9,909 crores. If I double click on the overall performance by segment, the first segment, which is industrial, our quarter performance sales was at 1,572 crores. Recording a growth of 24%. PBIT was at 176 crores versus 175 crores in the previous year same quarter, and the gap that you see is primarily due to the commodity prices, increase in the share of railway business that is increasing at much faster pace, and also the strategic investment into the consumer durable business. The order intake for the quarter was at 1,893 crores, which is 2% growth, with a strong order inflow in the motors business, primarily in the last quarter, and the unexecuted backlog of 31 as of 31st of March was 3,290 crores. Full year performance for the industrial segment, our aggregate sales for the year was 5,823 crores, growing at 16% year over year, and PBIT was at 707 crores, which is 12.1% of sales. And again, the same reason, the gap that you see in the profitability for industrial is primarily due to the commodity price increase, some of it which could not be passed on to the market, as well as increase in the share of railway business and the investment of consumer business. Order intake for the full year was 6,891 crores, which is 20% growth, and unexecuted order backlog as of end of March was 3,290 crores, which is 29% growth. If I go to the other segment, which is our power segment, the quarterly performance sales was at 993 crores, a growth of 21%. PBIT was 208 crores, which is 21% of sales, as against 152, which was 18.5% in the segment. And these margins were high primarily because of better price realization on the execution and also the operating leverage. And order backlog for Q4 was at 1,757, which is 48% growth, and the unexecuted backlog was 6,619. For the full year performance, the sales was 3,510 crores, a growth of 35% year over year, and PBIT was at the growth of 61% year over year at 668 crores, which is 19% of the sales, as against 16% in the previous year for the same portion. Margins were higher year over year on account of better price realization, as I said, and also the operating leverage. Order backlog for the full year was 6,635 crores, which is 54% growth year over year, and the unexecuted order backlog as of March ending was 6,619 crores. Now we go into the consolidated financial results, which includes the performance of the operating subsidiaries at Sweden, Germany, Netherlands, which is Drives and Automation, CG Adhesives Products Private Limited, and CG Semi Private Limited, Gigitronics, Xero Semiconductors Private Limited, and other non-operating subsidiaries. So the Q4 performance for the all the subsidiaries put together, the sales was 2,753 crores, which is a 26% growth. PBT was at 384 crores, which is at 13.9% of the sales, versus 14% in the previous year. A little bit of margin impact you see is due to investment into CG Semi and Xero Semiconductor business, which was the impact of about 15 crores. Free cash flow generated for the quarter was 80 crores. It was also driven by 125 crores of capex done in the subsidiary, which is CG Semi. Return on capital employed for quarter 4 was at 37%, and order intake for the quarter was 3,824, which is 22% growth, and unexecuted backlog at the end of March was 10,631 crores. Full year performance for consolidated is the sales was at 9,909 crores, growth of 23% year over year. PBT of 13.6% of sales versus 14.1%. As I said, the margin impact is due to investments into CG Semi and Xero Semiconductors, impact of about 22 crores. And free cash flow generated for the year was 548 crores, and it was also driven by 173 crores capex done in the subsidiary, which is CG Semi. Return on capital employed for the year was 32.5%. Order intake for the full year was 14,684 crores, which is 40% growth year over year, and the unexecuted order backlog as of 31st of March was 10,631 crores, which is 66% higher year over year. Some of the key events during the year we had is pursuant to the shareholders agreement, share purchase agreement, and share subscription agreement. We entered into agreement with Gigitronics, which is called GG3, and the existing shareholder of GGT, CG acquired a controlling stake in GGT with effect from August 2024 That's the acquisition date, through the combined purchase of equity shares and the compulsory convertible preferential shares for a total sum of 319.38 crores, result in GGT becoming a subsidiary of CG. Second, GGtronics, also a subsidiary of the company, received a prestigious order towards the locomotive train collision avoidance system, which is called TCAS. Also in India, we call it Kavach, in the range of 500 to 600 crores. And the scope includes the supply, installation, testing, and commissioning of onboard Kavach equipment, including annual maintenance contract for 11 years. CG Power also in the solution, also the semiconductor mission ISM under the Ministry of Electronics and Information Technology, Government of India, and CG Semi Private Limited Company incorporated for setting up the OSAT facility, entered into the fiscal support agreement to avail the grant of subsidy towards the capex of up to 3,501 crores. The Board of Directors also approved a greenfield expansion of 45,000 MVA for power transformer capacity with an investment of about 712 crores, which we already declared. This will increase our overall capacity to 85,000 MVA by financial year 27-28, and this expansion is considered to be expected demand in the transformer industry, both in domestic, also cater to the exports market. And CG also secured an order for supply and service of railway products towards the manufacture of Vande Bharat train sets by entering into a long-term supply agreement with Kainet Railway Solutions Limited and the service of the railway products, introducing propulsion kits and motors, transformers, and other items. And as part of this agreement, this purchase value is between 400 to 450 crores for the supply, and this will be applicable for the first order of 10 Vande Bharat train sets. And apart from this purchase order, a separate 35-year service contract will also become a part of this agreement. The company has declared an interim dividend of 199 crores, which is Indian rupees 1.3 per share on 18th of March 25. The last one I have on this is that CG entered into a definitive agreement with Renesas Electronics America and other affiliate entities of Renesas Electronic Corporation for acquisition of radio frequency components business through one of or more of the subsidiaries of CG. And CG has obtained the approval from Committee on Foreign Investment in the United States and the necessary regulations and the statutory approvals for acquisition. Subsequently, after year-end, upon payment of consideration, CG has obtained control over the radio frequency components business from Renesas Electronics America Incorporated and the affiliate entities of Renesas Electronic Corporation. And the audited financial statements with detailed notes are available as part of the stock exchange filing and the company website www.cgglobal.com. Thank you for listening, and over to you, Renu, for Q&A.
Sure, we can open the session for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Harshit Patel from Equirus Securities. Please go ahead.
Thank you very much for the opportunity, sir. So my first question is on CAPEX. Just wanted to check the status of our CAPEX projects for power as well as distribution transformers. Have we finalized the land for the new 45,000 MVA capacity? Also, we were expanding this power transformers capacity at Bhopal location as well, from 17,000 to 40,000 MVA. So is this expansion complete? Similarly, the status of the distribution transformer capacity expansion at Gwalior.
Super. Thanks for the question. And yes, I will answer the first one, and second I can divert to Ajay to talk more details. The land for the new plant for 45,000 MVA, that land is almost allocated to us. It will be in Bhopal only. Some formalities are being done, so hopefully in next couple of weeks we should be done with that and start the construction. And regarding our capacity expansion in existing and distribution transformer, Ajay, just give a high-level indication on that.
Yes. So regarding the capacity expansion, so it is in advanced stage now. If we talk about the distribution transformers in Gwalior, so some parts will become operational within next 2 weeks, and the whole expansion in for distribution transformers will be over by end of June. And for the power transformers expansion in Bhopal from 17,000 to 40,000 MVA, winding shop is already operational, and the ovens will be getting operational within next 2 weeks, and the whole plant will be operational by middle of June.
Understood. Just a follow-up to that, we were also planning to commission additional HT motors capacity at Bhopal only by the end of FY25. So any status update on that?
Yeah, so I can pass it on to Indraneel, talk about HT capacity in Bhopal.
Yes, we are on track as per the plan, and that's exactly also resulting into, as Amar said, some of the results what we talked about. We are exactly as per plan.
Okay, sure. So my second question is on our railways business. We have garnered a very prestigious order from TimeAid as well for the propulsion systems. Now, at the beginning of FY25, we had guided for close to 40% revenue growth for our railways business in FY25. So have we achieved this kind of growth? And given a very strong order book, what would be our plans for the next couple of years? Would we able to maintain this kind of very high growth momentum, or because of the high base, the momentum could taper off a little bit? So if you could give us some broad idea about the prospects of the railways business for the next 2 to 3 years, that will be very helpful.
Yeah, I think good question, and you have seen the momentum of that. Although we don't give specific guidance on specific businesses what will grow, but yes, railway has grown in high double digits already, and with these prestigious orders, which the team is right now busy for the R&D and also the execution excellence team, they are working on that. So if you tell me what is the plan for next 2-3 years, is that we are playing between the domestic market, which is very, very important because we stay committed to Indian Railways, and also we are exploring the exports piece of it, which the team, Chidambaram and team who is leading this business, they are actually busy building on the R&D capability for that. So we still stay bullish on the railway business.
Understood. Thank you very much for answering my questions, and all the very best.
Thank you. The next question is from the line of Ankur from HDFC Life. Please go ahead.
Yeah, hi sir. Good afternoon. Thanks for your time. I have 3 questions. First, on the industrial segment margins, and one of the things you mentioned is because of higher RM prices, there's been some decline there. So if you could just help us, have you taken price hikes, or are we planning some price hikes within the motor business to kind of offset that increase in RM?
Yeah, so fair point. As you know, that for motor business, one of the raw material is copper, and that has been not behaving very nicely. So if you look at the indices, it's gone up substantially. So some bit of it, yes, there's a disciplined way of balancing what can we pass on to the customer. Unfortunately, commodities is on the rising trend.
Ladies and gentlemen, we seem to have disconnected with the management. Please wait while we rejoin the management. Ladies and gentlemen, we have the management back online with us. We'll continue the question and answer session. So, please go ahead, sir.
So should we continue with the question that was asked?
Yes, sir. We have Mr. Ankur online.
Okay.
Yeah, I can continue.
Okay, super. So I was talking about motor business. As you know, the commodity copper is one of the key input for the motor manufacturing. Unfortunately, that has not been behaving well. There's inflation on that. On the other side, if you see IIP index for the last 4 quarters has been going down. If my numbers are right, from 6.3 it has gone down to 3.8. And then also the EMA data shows that last 2 quarters have been declining. In fact, last 3 quarters have been declining in terms of offtake of the motors. So in spite of that, we have been able to balance the two. When I say balance the two means what? One is that we have been able to gain the market share by getting the right orders. We have been able to pass on some bit of it, whatever inflation has happened due to the commodity, but not everything out of that. So it's a balance game between the volumes and the margins.
Right. Okay. And since you also touched on demand, if you just help us, how are you seeing demand trends on the motor side as well?
Demand trend domestically is, if you go by the book, apple-to-apple comparison, it's not so great. But the reason, if you see even last quarter, our order bookings for motor has gone up. In fact, consecutively last 2 quarters, motor orders have been going up. It's a combination of a couple of initiatives that we have, and I talked about that in the last quarter as well. One is our go-to-market strategy on key account management domestically in India, as well as for our exports. So both our leaders, Idradil and Murray, they are working together to make sure we have the right product, which practically every quarter we are launching 2 to 3 new products, as well as the channel setup across a couple of countries where we see the potential. So everything is happening in tandem, and that's what is showing us increase in the volumes in terms of orders, not really fully on the revenue right now.
And just a last question on the consumer business. You did mention that you are making investments to kind of scale that business up. If you could just talk about, how big is it right now? What are the kind of targets you have in mind? How is that kind of shaping up as well? Yeah. Thank you.
Today, see, as I said, we don't give the specific number of each of these businesses, but yes, even for the last year, it has grown pretty high double digits. But the way we have put the aspiration, and I'll hand over to Sriram, who runs this business, talk about top 3 things at high level, what we are doing to really scale up this business to different levels.
Yeah, thank you. I think it's a great opportunity to share, what is actually happening in the consumer front. So the first is this year actually we are starting laying a foundation for this business. From building an organization structure, building the capabilities within, starting from a sales team to the back-end operations to handling the right set of vendors. So I think this year is actually going to be more of laying a foundation for a strong, sustainable growth for the future. Because we see this business having, had a break of close to 5 years. So we have to restart the entire engine, by building a brand, building a strong go-to-market, and then building a strong back-end structure. In the last 6 months, we are being partly successful in getting the organization in place and building a back-end in place. We also managed to get a lot of good vendors on board. So this year, we also planning to enter into the second category. So the 2 focus category as of now for us is pump and fans. But you must have seen in a couple of months ago, we have launched air coolers. We are also planning to get into water heaters in a much more aggressive fashion. So you get to see building the innovation. These are the stuff which is actually planning to come up in the future. So we see this business not from a current perspective, but looking at a long-term, next to 5 years perspective. We wanted to become at least the top 5 players in the electrical consumer durable sector. That's what we are aiming for.
Great, got that. Thank you.
Thank you. Ladies and gentlemen, In order to ensure that the management is able to address all questions from all participants in the conference, please limit your questions to two per participant. The next question is from the line of Mohit Kumar from ICICI Securities. Please go ahead.
Yes, sir. Good afternoon, and thanks for the opportunity. My question is on the, sir, you won a significant order from Kinet. The press release mentions propulsion kit. What do you mean by the kit? Does it include only motors and transformers, or does it also include converters? And is it fair to assume that this 4 and 4.5 billion order will get consumed in FY26 and the new orders from the same customer can follow through?
Yes, I think, as I said, this is for 10 train sensor offsets of Vande Bharat, and this is the beginning of it. Depending on successful execution of this, the way will begin, so more will follow. And to double click on what does propulsion system mean, I'll hand over to Chidambaram, who runs this business. Chidambaram, over to you.
Yeah, we signed a long-term agreement which has 8 years of supply, which is as per the MCMA given to TMH from Indian Railway. MCMA is maintenance cum service agreement, and there is 35 years of service that they have signed with Indian Railway. We got that back to back. So all these orders we will be getting on an annual basis. First 8 train sets will be supplied in the first year, for which we got the order for 400 crores. And subsequently, the next order will come with its own PVC, so it will keep coming for 8 years, which will be supply contract. As Amarji said, we will be doing the systems engineering. So everything from pantograph to the motors will remain part of our kit.
Understood. My second question is, how does the central government subsidizes for the semiconductor project? Is it based on the milestones on which the government release the money? Will the money will come in tranches, or will come at the end of the project? And what is the capex plan for semi in FY26?
Yeah, so I'll pass on to Sushil, who's our CFO, to answer that.
So in respect of your first question about how the money is coming from the government, it's based on the pari passu. Hope you understand the meaning of pari passu, right? It's not about that we invest the money coming in from the government. It's all about pari passu. In case of the capex investment for CGCMI, we are thinking probably that the commissions of this project will happen in next couple of years, the entire commissioning of this project.
Understood, sir. Thank you and all the best, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Bhumika Nair from DAM Capital. Please go ahead.
Yeah, good evening, sir. So my first question is on the power systems segment. We've seen a very strong performance in FY25, both in terms of revenues and margins, being at a record high at 21% in the fourth quarter. As we are booking new orders, what is the kind of margin profile that we see sustainable over a period of time? And within this also, if you can talk about the TBW acquisition, what is the status of that acquisition?
Yeah, so on the power sector, I think we see the growth momentum continued, and so I keep talking about, I don't see this demand going down at least for the next 4 to 5 years, not only in India but globally as well. And that is a very, very conservative estimate that I'm talking about. So when the demand is more than the supply, then obviously you will have better margins reflecting on that. So that's the answer to your first question, Bhumika. And the second one on the BTW, I think that's still under discussion with BTW because there is some end date is end of May or something before they can close the deal. So those transactional things are going on.
Okay. On the IS segment, you spoke about the market being weak and we are gaining market share. Would it be possible to call out market share numbers for LT and HT motors separately? And we were working on several initiatives, particularly for HT, to kind of scale up the market share out there. What is the progress? How are we looking at further market share gains, if we can talk about that? And perhaps if I can just squeeze in one question on the semiconductor. We've seen a loss in the fourth quarter. What is that related to, given I think Renaissance should start reflecting from the first quarter onwards?
So what should be the loss number that we should look at, and is this something which is sustainable? If you can just give some color on that, please.
So for the first question on a little bit on market share, internally, if you can answer that, and then I'll pick the semiconductor one.
So if you look at the market or the EMA numbers, the market has grown by around 4%, and wherein we have significantly grown to the tune of 12%, and which is taking us to overall domestic market share higher double-digit number. So that's on the alliance side. Obviously, as you would see, this quarter we have launched new series also to take advantage of increased capacity and really expand our footprint not only in domestic but also target the export market.
And any numbers, sir, for LTHT, our market share number?
I'm not sure whether we can have the specifics. Amar, any guidance?
Yeah. So I think we don't give specific to that, but generally on the, low tension motors, typically that we are the market leaders there. So
sure.
Where we are.
Right.
Okay.
So if you look at in that sense, we have grown our last year's market share by around 200 basis points, and particularly the good part is higher energy efficiency motors. We have improved by around annualized basis 450 basis points. So that's the overall for the LT side. Even if we talk about quarter on quarter, that's around 200 basis point improvement.
Okay. Great.
Thanks, Anil. And on the semiconductor piece, I don't know, Bhumika, which your question was towards Exero or was it towards CG Semi?
Sir, the consolidated numbers, we see a loss of 14 crores for the quarter and 22 crores for the year. So just wanted to get a sense on what is that, and from Renaissance numbers, as we understand, will start coming in from 1Q. Would that understanding be correct?
So that is basically, you see both the businesses are new. These are more strategic investments. So OSAT piece, which is CG Semi, that will be, obviously it is running right now, and I think the earliest, because there are two plants which are under manufacturing. One is the mini plant and the main plant. If my memory goes well with me, the mini plant should be operational by next financial year, and thereafter, subsequently the main plant will come up. So it'll be at least a year or so till we see the production out of that, because it's being set up right now. Exero, yes, we just completed the acquisition. The team is in place. We inaugurated the office and the lab in Bangalore. So that team is getting up to speed. So hopefully from next quarter or something, we'll see a bit of numbers on that. But again, that's more into design kind of activity. So that we'll see.
Understood. Great. So I have more questions. I'll come back in the queue. Wishing you all the best. Thank you.
Thank you, Bhumika.
Thank you. The next question is from the line of Rajesh Kothari from Alpha Accurate Advisors. Please go ahead.
Good afternoon, sir. My question is on this new OSAT project. Recently, what we've been reading in the press that the two projects which of the semiconductor side, it has been kind of under review, or there might be cancellation, or they are reviewing whether to go ahead or not. So the change in technology is probably impacting the decision making on the semiconductor side. How do you see these two have any impact on your business, and what are your views on the changing technology, and how do you plan to cope up on that?
See, from our point of view, news will keep floating, but we don't see anything of that sort. We are aggressively going about this, and you would have seen, even in my pitch, I talked about the agreement we signed with ISM, which is India Semiconductor Mission, the ministry. So they agreed. In fact, out of all the companies, probably we are one of the first ones to reach that stage. The construction is in full swing. Our people are getting trained. In fact, the first batch just passed out after 3 months training in Malaysia. So everything is going at full swing. So we are not distracted at all with any news.
Okay, and with say next 3 to 5 years perspective, the total kind of a requirement, and as per the mission, what are the requirements and the kind of capacities which are coming up? Can you give a little bit broad color on that? That how do we see the overall competitive positioning on this, the number of projects which are coming up, and from your perspective, how the industry one should look at it, and what kind of ROC ultimately in the company can make on this?
So I think your question is a little more broad. I can talk for 3 hours on the subject. So at high level, what I would say is right now is the investment phase. Also, Renesas being our partner, there's an offtake, I think something close to 40 or 50%. Whatever we manufacture here will be taken back by them. That takes care of it in the beginning itself. And second is also our sales team, business development is already getting in place. We are hiring for that, even though manufacturing is more than a year ahead. But they already started reaching out to different OEMs to make sure that we are getting those inroads right in the beginning rather than waiting once we start manufacturing. So right now I would say it's a completely in progress or in process phase.
Great, sir. Thanks. We'll talk offline. Thank you, sir.
Thank you. The next question is from the line of Amit Mahawar from UBS. Please go ahead.
Thank you. Amar, is it possible for us to give details on fiscal 25 orders on export versus domestic, and if we can break it into industrial and power for greater clarity? That's one.
Hi Amit. Unfortunately, we don't give so much of split, to everybody. We generally talk about high-level segments. Overall, how much is the split between domestic and export? Yes, that is possible. Then by segment, industrial and power, that's also possible.
Overall export order intake for 25 would be great.
Do we have overall split on this?
So your question is from what point of view?
Order intake breakup between domestic and exports.
Intake it's very negligible numbers in the overall numbers. It's nothing
for the exports.
For the export side.
Yeah.
Okay, sure. And our second question is more on the profitability of industrial. Now we have a large piece which is non-rail. I understand fiscal 25 we would have had like 30-40% plus growth in railway revenues, which was due to execution of old orders, which also impacted the margins. Even if I remove that, you are gaining share in, higher nodes, which like I3 also, so if you can throw some light on the profitability of motors, because if your growth is also happening in I3, I4, moving towards that, why is profitability not coming back in the motors, ex of railways on the industrial part?
No, if you see the profitability of motor again, the point is, if you look at last 2 quarters, it has actually started. There was a big impact about a year back. Q1, Q2 it was going down and down. And then from Q3 onwards, we picked up. In fact, towards end of Q2, July, August, September, we started making improvements, not only in the go-to-market, but also in the operations piece. And that's what is started showing up the results. So yes, as I said, last quarter also, we will go back to the margins where we were at. But yes, it's step-by-step journey. So can you hear me?
Sure. Yeah, I can hear you.
Hello, is the call on?
Yeah, the call is
Hello?
on. I think they are reconnecting the management.
Ladies and gentlemen, we have the management back online with us. Please go ahead, sir.
So same thing I was talking about is it's a combination, the split. Yeah, so motors will have some impact and bit of motors as well. So yeah. So any other question on that or?
Got it, Amar. Can I squeeze in third quick one, if you allow?
Okay.
Yeah. So in the light of recent, trade tariff negotiations, we want to review and revisit your export guidance of 20% that was set out. Just that's on it. That's it. Thank you.
So I know it doesn't change anything because primarily those tariff issues that you have is on Americas and our exports to the US is very, very negligible right now. Having said that, yes, the appetite is there. We are refining our 3 to 4 years plan, but it doesn't stop anything. So nothing changes on the export strategy.
Sure. Thank you, Amar, and good luck.
Thank you.
Thank you. The next question is from the line of Anupam Goswami from SUD Life. Please go ahead.
Hello, sir. So my question is on the semicon segment that we have taken out separately. How do we see going forward? What sort of expenses will we book on this segment? And when should we expect revenue coming?
So that, as Mr. Amar said in the beginning, that these are two pieces of this. One is that Exero, which we recently did a complete the acquisition side. So we start looking the revenue from this quarter one onwards. So we don't see any expenses coming on account of that piece. The offset piece, most of the expenses we usually kept aside because it's a project. Only more about functional and admin cost would be coming on every quarter basis.
Okay. Right. And my next question on the motor side. Now you mentioned about muted IIP data and EMA data as well. How do we see it going forward? Do we see a little flattish growth on this side, or have we, increased our capacity as well as capability to gain a higher market share and grow more than the market in there?
See, the market, we obviously will not comment on that. Market is what market is. Important is how are we contributing to that, and that's exactly we stay consistent. What we have performed in the last 2 quarters. So we'll continue our journey, which is getting market share gain, and that's what our focus is.
Should we expect the same kind of growth that we've seen this year or the last 2 quarters?
We are not specific to a particular business that I will not say. I mean, we have the projections for the year, and that's what we are working on to grow. So, yeah. So having said that, whether market grows or not, we still have the strategy we are working on will definitely give us incremental growth. Okay. A combination of domestic as well as exports.
Got it. Thank you, sir. I'll join that.
Thank you.
Thank you. The next question is from the line of Ashwani Sharma from Emkay Global Financial Service Limited. Please go ahead.
Hi, sir. Thank you for the opportunity. Sir, just a bookkeeping question. So, in your initial remarks, you mentioned about some impact due to new investments, somewhere in the range of 15-20 crore. Can you confirm that number again, sir?
This is if you go to the segmental result, it is reflecting separately that a semiconductor loss which is coming around 15 crore.
That's all? Nothing else, right?
Yes, yeah. That is for the quarter 4. For a full year basis, the number is 22 crore.
Okay. Yeah. Thank you very much, sir. Yeah.
Thank you. The next question is from the line of Vasant Bansai from NBC Investment. Please go ahead.
Yeah, good afternoon. Mr. Amar, you said that you cannot give guidance about the individual segment, but can you throw some light? How do you see your business growing in next 3 years, top line as well as the bottom line?
Yeah. So as I said, individual is not there, but yes, each of the business verticals that we have within these two segments, we are already done with the annual operating plan, which means we are clear for this year which area, which segments, which will drive the growth, not only on the top line, but also on the profitability. So that's a combination of a couple of levers that you have. One is on the what will you pass on to the market, and that we call top line margin expansion. And so we are very disciplined, getting very disciplined on that. Number one. Number two is also operational excellence piece of it. How do we ensure that operationally we are able to eliminate as much waste in the system as possible, because customers don't pay for that, and that's how you become more and more efficient. So these strategies will continue to grow as we are progressing.
So can you give any number for top line?
Number for, you mean the growth, or what are you talking about?
Yeah, growth or top line.
Will be so specific number I won't be able to give, but yes, it's a high double digit.
Okay. Now the second question is, when I compare your segment result for the this quarter result is the previous quarter, and I see that in the previous quarter for industrial segment margin was 13.5%, and for this quarter it is 11.2%. So there is a drop of 1.3%. So how do you see this margin trajectory going forward?
This can only go up from there. If you see, yes, versus previous year, same quarter, it has gone down, and we have put the reasons also there. One is that commodity inflation, 100% of which was not able to pass on to the customer. And so yes, there is a material labor overhead productivity. That's what we are working on, and also opening up the doors for new areas or the segments where we have not been present. So that is where the team is busy right now to work on.
Yeah, but it includes railway business, which you see growing at around 35-40%, and which is not very high margin business, because I heard in your previous con call that you are sort of doing a help to the nation by not charging them on the higher side. So the margin on your railway business will be of moderate nature. So in view of that, will you be able to maintain 11, 12, 13% kind of margin on your industrial business segment?
Absolutely, Vasant. That's what I said in the beginning. So it's a combination play of different businesses within the industrial vertical. And when I'm talking about what the strategic things that I talked about, which is getting executed, is not only in one business, motors. It is for motors, it is for consumer products division, it is for railways. So all the leaders are in sync with what our strategy is. So because our size of business has become reasonably big, so when the company is 10,000 crore plus, so obviously the processes and systems take over. And that's what we are driving. So we are pretty confident of hitting those numbers.
Okay. Thank you very much.
Thank you.
Thank you. The next question is from the line of Abhinav from ICICI Securities. Please go ahead.
Hi, sir. Thanks for the opportunity. My first question is on the order inflows. So for the railways, can you quantify what was the order inflow for FY25, and also any comment on the outlook? Secondly, for the motors, you mentioned that you have strong order inflow for the quarter. Can you quantify the number for the quarter and the fiscal, and also bifurcate in terms of high tension and low tension separately?
Yeah, thanks, Abhinav. But unfortunately, we cannot share so many details by specific each of the businesses. Yeah, we generally stay with the segment.
Any comment on the outlook for railways?
Future is bright.
Thanks, sir.
On a serious note, yes, as I said, and there was a previous question on the margin as well, railways. So the strategy, as I said, is we are serious and committed for Indian Railways, but yes, a lot of focus. The team is busy on R&D for the exports market, and we are getting there very, very aggressively. Since you talked about railways, so we are probably one of the first companies who got certified by American Association for Railroads to talk about, some of the items are right now in American locomotives under testing. 3 months have passed. I'm sharing a little more details than I should be, just to, make you comfortable. So that is, till now, absolutely no issues on that. So that will flow through some of the orders that will come after this testing is completed.
Thanks for that, sir. The second question is, what will be the rationale behind acquiring Baoding, and what does that
acquiring what?
Baoding, the Chinese company, transformer.
Oh, BTW, you mean?
Sorry?
BTW.
Yeah. So, what will that bring to the table?
Yeah, so I think that is still not materialized because, as I said to the earlier question, by end of May we'll get to know whether that is happening or not happening because there are some regulatory issues, etc., getting decided. So by chance, if it is coming, so we will have very quickly almost 12,000 to 15,000 MVA capacity added, and we can restart the manufacturing. So that adds to our capacity immediately. So that would be the advantage, and then it can always be scaled up.
Thank you, sir.
Thank you. The next question is from the line of Bhumika Nair from DAM Capital. Please go ahead.
Yeah, thanks. Just wanted one clarification on this Mini and the Max CG Semicon plant. Can you split it, in terms of, what is the kind of capacity or capex or some color on what do you mean by Mini and when it's getting commissioned the next year? What percentage of capex will be done or capacity, etc., to just get some understanding?
Hey, Bhumika, I think that's a little longer answer, so you'll have to meet us separately to go through it. So yeah, because it's not a straightforward, simple question to both questions.
Sure. And
the good news is because this is the time of board meetings, so we had the board meeting for X0, we had board meeting for CG Semi. The CEO of the business made the presentation. Both the projects are on track, which is a good news.
Understood. And just on lastly, in terms of given that, most of our capacities are now coming on stream or largely commissioned, what is the kind of capex that we'll see on our core business of power systems and IS?
Can you rephrase your question in power systems specific to what?
No, I was just asking what will be our annual capex for FY26 on our core CG business?
So that remain in the same range, Bhumika, around 300 crore plus.
Sorry to interrupt you, Bhumika ma'am, but I would request you to rejoin the question queue.
Thank you.
Thank you. The next question is from the line of Alok Ranjan from Millennium Partners. Please go ahead.
Yeah, thank you. So just one clarification on this Renesas radio frequency component business which we have acquired. The annual revenue you mentioned in one of the recent investor presentation is that $56 million in CY23. What is the revenue number for this business in CY24? And what kind of run rate we can expect from this business in FY26 for our company, and what could be the margin for this business? Thanks.
So hi, Sushil here. I think for this year we expect a similar kind of a revenue. And margins we are really not talking too much at this point of time because this is just a transitioning phase. So the complete AOP and everything to be presented by the CEO who is running this business by next board meeting.
And this will be clubbed with the semiconductor segment, sir, in terms of the revenue and the EBIT margins?
Yes.
Yes. The design part?
Yeah.
Okay.
Yeah.
Got it. Thank you, sir. That's all from me.
Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to Ms. Renu Baid Pugalia from IIFL Capital for closing comments.
On behalf of ISL, I would like to thank the management for giving us the opportunity to host this call. Sir, any closing comments from your side?
No, thank you. Thank you so much for coming over and listening to us patiently, and always pleasure to answer the questions. Talk to you guys soon. Thank you.
Thank you.
On behalf of CG Power and Industrial Solutions, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.